Alright traders, I'm back again with another video, and today we want to take time to look at a few of the yen pairs, four of the yen pairs, because the yen is starting to show some weakness. So we want to be able to catch anything if there's a possibility to get into a trade. The yen is showing weakness against four pairs that we're going to look at. It's going to be the US dollar yen, the pound yen, New Zealand dollar yen, and the Aussie dollar yen. So those are the four pairs we want to look at. But we're doing our technical analysis. We also want to do our fundamental analysis. So that would be in which would include looking at the news events for each day. So if you're in a trade with the yen or any other pair, just check the news and see what's going on that day, if anything can affect your trade, and look at the high priority events that are going to be happening. And you can see these events. So I'm not going to go over all of these, and I looked at stuff already. So when I open up a trade or go into a trade each day, I look to see if there's any news that may affect my trade. And if it will affect my trade, I monitor my trade. I maybe get out of my trade, or I bring my stop loss way up, or whatever, depending on where I am in the trade or whatever. Sometimes if I've made enough profit, I could get out of the trade and just wait for the market to come back to normal. I'll say, okay, so here we go. Just take a look at the news and make sure you know everything is good for your day and your pair, and then continue on with your technical analysis. All right, so that's what we're looking at, traders. And now we want to look at another thing that we want to look at is going to be the strength indicator. The strength indicator for the pairs that we're trading. So let me go to that real quick. All right, so basically we're looking at the yen versus those four pairs that I told you: the US dollar, the pound dollar, Aussie dollar, and New Zealand dollar. So looking at this, you could see the weakest pair that's below. The one on the bottom is always going to be the weakest, and the one on the top is going to be the strongest. So the one on the bottom is the yen, and the farther away that they are from each other, that's more of a trend that the pair is in. So you could see how far they get apart from each other. You can see this pair way up here. That's going to be the New Zealand dollar yen. So that might be in a pretty good trend because it's so far away from the yen, and the yen is weak versus the New Zealand dollar. So you might want to look at that New Zealand dollar, okay? And then the Aussie dollar versus this yen. I'm in the I'm in the Aussie dollar yen trade right now, and you know, right now it looks pretty good. You could see how strong the Aussie dollar is versus the yen, okay? And then now you got the right here you got the pound dollar versus the yen, and it's strong against the yen, but not super strong like these two pairs. And then your US dollar, which is the weakest versus the yen, and it probably not doing much because it's separating, and it's not as big as these other pairs, but it probably trending up a little bit. All right, so let's go straight to the charts and start checking them out, see what's going on. And see, I'm in this trade, the Aussie yen, like I told you, and I got in this trade, and right now I'm good for 110 pips. I'm going to show you what happened with this trade. And basically I showed you on the last video how to get into the trade using the Williams percent R down here, which is down here, and it's set at 50 period Williams percent R. And then also you got the 100 period moving average right here. We broke this 100 period moving average, so price was above its 100-day moving average. Basically it's not the 100-day here because we're on the 4-hour time frame. So we broke the 100 period moving average, and when we broke that, we got into the trade. But we also needed to have the Williams percent R above this negative 50 level here. And we're not going to go deep into the Williams percent R right now. I may make another video and just go strictly into that and tell you about that. But I showed you in the last video how to use it, what it's used for, and the parameters of it. Okay, but basically it's a momentum oscillator. It's almost like the slow stochastics. You put them two together and they're pretty close. But you can see I entered the trade here. Like I said, I'm good for 110 right now, and I'm going to let this trade go. Basically I have rules to get in and out of the market, and there's nothing telling me that there's any weakness or reason for me to believe of getting out of this market. Now, I got into the market a few days ago, and then over the weekend I held this market, and then when Sunday came and opened up, the market opened up and dropped all the way down here, but this was before the open. So when the market opened, at the time it opened, it was down here. So I went from 80 pips to -5 at the time, and then when the market opened I was -5. I could have closed out the trade, but there was no reason for me to close out the trade. We were still above the -50 level, -50 level on the Williams percent R, and we were still above the 100 period moving average. All the reasons I got into the trade were still there, but we had a big long candle that took us down. Well, what happened here? The next candle slowly started moving up, and then we got back up to this level. Now the important thing here is this level right here. If we can close above this level, this will be very important, because this level is the previous week's high, and to break above that level and close above that level, that'll be very good for the trade, because that previous week's high will now be support for us, whereas it's resistance now. The market is being resisted to break that level, but if we violate that level, then we'll have this level as support for us, and so that would be very good for the trade. I'm going to be able to move my stop loss up to keep following the trade with the 100 period moving average. Now I could wait and let price move off and take off a little bit and move up to this previous week high level, put my stop loss. But there's so many things you could do, but the main rule that I have is I'm going to keep my stop loss underneath the 100 period moving average. Monitor my trade. Like I said, I'll get out of a trade. I'll never let a trade come from, like I said, 100 or 150 down to zero. You never will let that happen. Now it did happen to me from 80 to zero, because the market opened up, it's 80 pips lower than what I got in, than when it closed on Friday. So that would have been a big loss there, but we still accounted for our stop loss. So the stop loss was, we were only -5 based off of where we entered the market. All right, so that's the Aussie yen, and we're looking good. I'm looking for that market to get up to this level. This is the previous month's high, and that'll be a double top. Probably the market will hit that level, bounce and start to drop, and then maybe see what happens there. Probably when I get to this level, I'll be satisfied with what I have once price moves to that level. We're at 110 now, and another, say basically almost another 95 pips. That'll take us over 200. So that'll be a nice trade. I'll take 200 and close out. Okay, so that's the Aussie yen. New Zealand dollar yen, and the New Zealand dollar was the pair that was showing the most strength against the yen. Now look at this Aussie. That looks strong against the yen, but the chart was showing the New Zealand dollar stronger against the yen, and pretty much the same. You see it, the previous week's high, we're sitting on that. This will be a great opportunity to get into this market right now, because once this candle closes, this is a 4-hour candle. We're almost halfway there. We got another hour and a half before this closes, hour and 35 minutes. So when this candle closes, if it closes here, there's a possibility you could get into the trade and put your stop loss below this level here, because this, like I said, is your previous week's high. And if you get in on that previous week's high, it'll be now support for you, so you can put your stop loss a little below that level. And here's your risk to reward. Here's your reward up to this level. All right, previous month's high. So you go from the previous week's high level to the previous month's high, and you can see it'll be pretty good, because your Williams percent R is above the -50. We're up in the basically we're up above the -20 level, which is going to be your overbought level. So once the market is overbought, it could stay up there for quite a while. I'm going to show you right here. If you would have got in up here basically, and you're saying, oh, I'm going to enter when the market's overbought, yes, you're going to enter when the market's overbought. That's what you want, when all the buying is going on. So here we go, and look how long it stayed up in that level. Boom. So that would have been a good trade if you got in on the overbought level, and that's where we are now, right there. And I'm looking for this to close above that level, and that would be a good entry there to enter here and put that as your stop loss and ride it up to this level at least. Now the thing is, if that's going to be, once this candle closes, if it closes too far from this level and it's too big of a stop loss for you, you don't want to do the trade. And also, depending on how high it closes, if it's more than halfway of this distance, we definitely don't want to do that. Okay, we don't want the stop loss to be too big where we it's going to affect us, more than 2 to 3% of our trading account for a stop loss. So we have to make sure of those things. Those things will take you out pretty quick and lose your account for you. But this is looking like a good opportunity. You're above your 100 period moving average. You're above your -50. You're in your overbought level with your indicator. Nice entry here. All right. The market pulled back, broke that level, may pull back again to this level and then take off again. So that's a good opportunity there. Pound yen, same thing. We have a lot of resistance on this pound yen though. The pound yen is up against the 100 period moving average and the previous week high, and we have yet to reach the overbought level. So we're showing strength based on the indicator. You could see the indicator moving up and breaking up through the -50 level, and also you could just look at the market and you can see it, the strength of it coming up. All these green candles. How many green candles here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green candles before a red candle on the 4-hour time frame, and then you had 2 red candles, and then now finally we're going again. If you break above this level, you're going to be breaking above this fractal level, above this previous week's high, and above the 100 period moving average. This also would be a good entry here. Ride this up to this level here. Stop loss a little below this previous week high. Now there's a couple places you could put your stop loss. You could put it below your candle, a little below the level, or below the fractal level. All right, you got to weigh your odds and see how big of a stop loss it is for you, and decide where you want to put your stop loss. And then you can ride it up to this level, and then you can monitor your trades, see what happens from there. All right, so we're yet to break into the overbought level. We're coming from the oversold level, and we're up past the -50 on the Williams percent R. So this is looking like a good opportunity too. We want to see where that closes. We want that to close above that level. And finally, we're going to look at the dollar yen. And the dollar yen, we're in the overbought level with the indicator, and basically we're still underneath the previous week's high. So if we can break that previous week's high, get above that level, that's what we're looking for. That'll be a good trade for us to get above that level, close above that level, and use that level as our stop loss. Move it down a little. Now you can also, like I said, move it down to the 100 period moving average, and also to the fractal level, which also is in line with the 100 period moving average. But you break this level, and then you can let this trade. You'll have to monitor this trade and see if you can ride this trade up to this previous month's high. That'd be a very good trade. So we have to wait and see what's going to happen. This candle may not close above that level, and if it does, like I said, then there's a good level opportunity for a trading opportunity long. The yen is showing weakness, so we're expecting these pairs to continue upwards versus the yen until maybe something changes that. But there's nothing in effect right now, or anything short term or on the horizon, that shows that the yen will be gathering any kind of strength. So looking at them 4 pairs there's some opportunities for you guys to look at the market and maybe decide on getting into a trade, something you may want to. All right, so hopefully traders, that's helping you, and maybe till next time, may God bless you, and may you have a great trading day, trading week, or whatever you trade. All right, traders, thank you. God bless you. So long.